If you're a non-citizen living or working in the US, you know the tax system can feel, well, like a giant, confusing maze. But don't worry. In this explainer, we're basically going to hand you the map. We're breaking down US tax residency one simple step at a time.
So think about it. Before the IRS even gets to your income, your job, or any of your deductions, they ask one single foundational question. It's the question that shapes everything that comes after. Any guesses what it is?
The answer is all about your residential status. And listen, if you take away only one thing, let it be this. Your tax status is totally, completely separate from your immigration status. You could have one type of visa, but for tax purposes, you might be something else entirely. And that one status decides exactly how you're taxed here. And here's why this matters so much. If you are a resident alien, you get taxed on your worldwide income. That means money you earn anywhere on the planet. But if you're a non-resident alien, you're only taxed on income from U.S. sources. I mean, that is a massive, massive difference, and it all hinges on that one little status.
Okay, first, let's get this out of the way. The word alien can sound a little weird, right? But in the world of U.S. taxes, it is just a technical term. It's IRS jargon that simply means you're not a U.S. citizen. That's it. Nothing more, nothing less.
So, the million-dollar question, are you a resident alien? How do you even figure that out? Well, the IRS has two very specific tests they use to decide. So let's dive in and break them down.
All right, these are the two main pathways to being considered a resident alien for tax purposes. You've got the green card test, and you've got the substantial presence test. If you meet the rules for either one of them, your status is decided. Let's start with the easy one. This test is pretty much exactly what it sounds like. Were you a lawful permanent resident? Meaning, did you have a green card at any point during the tax year? If the answer is yes, you automatically pass this test. It seems simple, but, the timing is actually everything.
And the rule is absolutely strict on this, even for one single day. So let's say you get your green card on, December 15th. The IRS considers you a resident alien for the entire tax year, not just those last couple of weeks.
Okay, so what if you don't have a green card? Well, this next part is for you. The substantial presence test, or SPT for short, is how most non-citizens end up becoming resident aliens for tax purposes. It looks a little complicated at first glance, but really, we can crack it with a simple formula. To pass the SPT, you've got to clear two hurdles. First, it's a simple check. Were you physically in the U.S. for at least 31 days this year? If you can say yes to that, then you move on to the main event, the 183-day formula. So how does this whole formula thing work? It's like adding up points. You take all your days in the U.S. this year, plus 1/3 of your days from last year, and 1/6 of your days from the year before that. You add them all up. If your grand total is 183 or more, boom, you've met the substantial presence test.
Let's walk through an example to see it in action. Imagine you spent 120 days in the U.S. for 3 years in a row. Using that formula, your total comes out to 180 days. You'd fail the test. But look what happens if you stay just 5 more days in the current year. Your total jumps to 185. And just like that, you pass. You're now a resident alien.
Now, there's a huge exception to this rule, a real game changer. Certain people, like students on an F1 visa or trainees on a J1, are called exempt individuals. This means, for a while, their days in the U.S. just don't count towards this test. But, and this is so important, being exempt from the day count does not mean you're exempt from paying taxes. It's a very specific distinction.
Okay, so we've covered the two big tests, but tax law, it loves its plot twists. There are special rules for people whose status actually changes right in the middle of the year. This brings us to something called a dual status alien. It's what happens when your status flips partway through the year. For instance, say you arrive on an H-1B visa on July 1st. For that first half of the year, you're a non-resident. But by staying through December, you meet the presence test. So from that point on, you become a resident. You were literally both in the same tax year.
There's also a pretty interesting strategic move you can make called the first-year choice. Let's say you arrive late in the year and you don't meet the substantial presence test. You can actually choose to be treated as a resident anyway. Now, why on earth would you do that? Well, it might let you claim certain deductions or credits that are only available to residents. It's a special choice with its own set of rules.
All right, we have been through the tests, the formulas, the exceptions, the whole shebang. Now, let's tie it all together and get back to the most important question. Why does any of this stuff really matter? Here's the bottom line, right here. Your status directly controls two huge things: what income you have to pay U.S. tax on and which tax form you have to file. Resident aliens, they report worldwide income on a Form 1040. Non-resident aliens, they report only their U.S. income on a 1040 NR. And those dual status folks, they have a mix of both. Your status really does write your entire tax story.